I lost over $100,000 in the market yesterday. That's not clickbait, it happened. Actually, it's somewhere between 120 and 150. I didn't add up the exact number because it's upsetting, so why would I want to upset myself? I haven't checked today, but I know the market's down a lot, so I may have lost another 100,000 today as well. That's upsetting, right? So I don't want to look at the market because I don't want to be upset. Should I be upset? Sure. I left my job on January 1st, and this is money that I need to live on, so losing a couple of 100,000 is upsetting, but there's nothing I can do about it. So I'm not going to panic because panic doesn't help anything. So I'm trying to be thoughtful about it. And that's why I posted the video yesterday with all the charts and numbers and everything like that, because I thought it would be helpful to you guys. And doing that helped me not think about what's going on in the market, because when you help people, then that helps you. So if I had been staring at the screen, watching my net worth go down, it might be very upsetting. But putting that video together, which I thought would help you guys, helped me as well, because looking at all the numbers, facts, and figures about how long things take to recover when the market's down, and how many recessions we've had over the past 100 years and how long they've taken to recover, that's all helpful. Math is truth, and the numbers and facts and figures are very reassuring. Not watching the market, it's what I call mental hygiene. There's dental hygiene, you want to brush your teeth every day and floss, and there's mental hygiene. Don't do things that are going to be upsetting to you, that are going to cause you to lose sleep, that are going to cause you to make bad decisions. Don't panic. Panicking never helped anyone. If you were in World War II, you saw the Germans coming up the hill, there's no drill sergeant ever that said, on the count of 3, everyone panic. It's not going to help, right? So what does help? Putting things in perspective helps, right? So money's a story. If you have a roof over your head, like I do, and you have enough to eat, like I do, everything beyond that is just a story that you tell yourself. And if you're going to tell yourself a story about money, tell yourself a story that helps you, not something that hurts you, right? So maybe I have a different perspective because I grew up poor. Not fake poor like J.D. Vance. J.D. Vance wrote a book and he exaggerated his family's circumstances to make him relatable and electable, but a lot of it turns out was phony. But like Simone Biles, he wasn't raised by his mom, he was raised by his grandparents, and they were actually upper middle class. So he didn't grow up in Appalachia, he grew up in Ohio, and he wasn't poor. His family actually gave him golf lessons, paid for golf lessons because they wanted him to be successful, and he's vice president now, so I guess it worked out. And he went to, I can't remember, it was Harvard or Yale, and he also exaggerates his military service. He says he was in Iraq, but he was a communications officer. He was a public affairs officer, so he was doing press briefings and writing things in Stars and Stripes. He wasn't actually doing any fighting, so everything about him is phony. But I didn't grow up fake poor like J.D. Vance. I grew up real poor. I didn't have golf lessons growing up. I had a dad who worked construction, which sometimes you make money and then sometimes you don't. And, I remember he had to get me and my brother Boy Scout uniforms from the Goodwill because he couldn't afford the new ones. And not saying anything bad about my dad. I'm just saying we grew up poor. Not fake poor like J.D. Vance, real poor. So the idea of losing all my money for someone who grew up middle class or rich, that would be terrifying. But, I have been poor and I was happy, and I have been better off, and I've been happy and I've been not happy. And I don't think money has to do with whether you're happy or not. And so I'm not going to go all Grandpa Simpson on you and say, back in my day, we had to walk 5 miles to school and it was uphill both ways and it was in the snow and had to do it barefoot. But I am old enough to have lived through 2 market crashes, the 2001 and the 2008, and I learned some valuable lessons from that. So in 2000, I had just graduated from law school and the tech crash happened. I was not actively investing yet, but it was still a source of great stress. And why is that? Because I was hired as a new attorney at a law firm and we had a ton of tech clients. And for those of you who don't work at a law firm, you've got the senior partners, the junior partners, you got senior associates, junior associates, and then you have what's called staff attorneys. So I was an associate, which means that if I stayed there long enough, I might have made partner. But below that were people who were staff associates, and it's kind of like adjunct professors. You're not tenure track. And when I was hired there, the tech crash happened, and little by little they fired all the staff attorneys, some of them who had been there like 5 or 6 years and knew more than I did, but they weren't tenure track. And after they got rid of all those guys, if you started cutting associates, I was the last one in, so I was really worried for my job. So it was very stressful, but the world recovered, and a lot of those companies that looked like they were on death's door, like Amazon, are now some of the biggest and most powerful companies in the world. So it's a lesson that I sort of try to keep in the back of my mind. Then during the 2008 financial crisis, I actually started actively investing before that. And like many others, I had gotten a hold of Joel Greenblatt's book and started trying it, and it worked out really well. I had some early successes, and then the 2008 crisis happened and nothing seemed to work. Everything was going under, even the S&P 500, and you couldn't switch to bonds, you couldn't switch to anything because everything was crashing at the same time. So it was very traumatic, having grown up poor, to see all this money that I had squirreled away and for a few years after that, I had been overly conservative, and it took some time for me to sort of get past that and to the point I am now. And what I realized is that the math isn't that hard, but it's the emotional part that is tough to deal with, right? So Peter Lynch famously said that if you can add 8 plus 8 and come up with a number that's close to 16, you know enough math to be a successful investor, that the most important organ is the stomach, not the head. And I think he was right about that. And that doesn't just go with investing. It goes with a lot of things where it's high stress environments. So, if you were in World War II, everybody panic is not a great, if you were in the military and you're being attacked, everybody panic is not a good strategy. If the building's burning, they tell you calmly walk towards the exit. They don't yell, every man for themselves, so thinking rationally and what to do, the right thing at the right time, will help you a lot more than panicking. So what helped me focus on the mental side versus just the math? It was a lot of reading, a lot of research, things dealing with performance psychology and errors and things like that. And that actually helped a lot. So even though I lost somewhere between 120 and 150 yesterday, and I'll probably lose the same amount today, I'm not freaking out. It's putting things in perspective and keeping track of your processes, because you can work your process, but if you deviate from your process, you're in uncharted territory. So what kind of things help? I'll put a link to some of these in the description so you guys can check them out. And I don't have it here, but one of the books that was really helpful was a book called Fearless Golf, believe it or not. And the person who wrote this book coaches some of the top golfers in the world, but he also works with some of the top hedge funds, like Stephen Cohen's Point 72. And he says that the top performers in golf, or the top surgeon, or the top surfer, or the top hedge fund guy, they all have these same characteristics. So reading a book like Fearless Golf will help with something like that. In a related vein, this is very old, but it's one of the original performance coaches. It's called With Winning in Mind, and this one is from a Olympic level shooter. And a lot of the things that you would see in Fearless Golf, or these people who coach successful traders at hedge funds, it's all the same. So those are two good resources. And an interesting one is this from Marcus Aurelius, The Emperor's Handbook. So Marcus Aurelius was a famous Stoic like Seneca, and he was actually emperor of Rome. And so, he had a lot of stress, and besides dealing with foreign invaders, a lot of emperors didn't live very long because they were assassinated. It just sort of puts things in perspective. And there's another famous Stoic called Seneca, who I thought was very helpful. because he was the richest person in Rome at one point. But in order to deal with the fear that a lot of people have, like, well, what if I lose it all? What would happen? He would do things to mentally prepare himself for that. Like, even though he was the richest guy in Rome, once every couple of months, he would leave his house, put on poor people's clothes, and stay in a shitty hotel for a while and eat poor people food, and, hang out in the bad part of town, and then come back, because that would help him sort of mentally say, well, if this is the worst that can happen, there's people that can deal with this. And if they can deal with it, I can deal with it. And that helped him a lot. So that's another interesting one. Some relevant ones to trading, what I learned from losing $1 million. And again, this is helpful not with trading strategy, but with mental strategy, which tends to be more important, because the math about like figuring a PE or doing a discounted present value calculation is something you can do yourself, or you just open up a Excel spreadsheet and it'll do it for you. That's not difficult. The difficult part is dealing with the emotional side when you see money that you've worked hard for go down. What do you do with that? So I think that's what's helped me be a better investor, is focusing on the mental side, not the math side. And another couple of books that are really good, The Psychology of Investing, and this is a very short book, but it's sort of like a bullion cube, where it's short, but it's got very concentrated ideas and you can grasp it quickly. And if we're in a bull market, which we're not, this is sort of a good one. And it's A Brief History of Financial Euphoria. It's a famous book, but we're sort of having the opposite problem now. Not that things are going too high, but they're crashing. But that's one to keep on the list. This one is, I mentioned Valiante, who was a psychologist who works with traders. So sort of like on the show Billions, where they have somebody that performs that role. Valiante is that. And this person passed away, but he was the original successful for this, F.i.R.e. Kiev. And he was a psychiatrist, and he, besides treating regular patients, he worked with Olympic athletes, and he worked with Wall Street traders. And so he was sort of the original performance coach that you would see on the TV show Billions. And the last recommendation I'll have is this, which is Timeless Thoughts, and it was compiled by Arnold Vandenberg, who is a famous investor, has beaten the market for decades, and he's also a Holocaust survivor. And this means a lot to me, because I met Arnold Vandenberg at an investing conference, and I asked to take a picture with him, and he did. He was incredibly nice to me, even though there were much more important people in that room, people worth hundreds of millions or literally billions of dollars. He took the time to talk to me and was very polite, and then took a picture with me, and then pulled this out of his bag. He had this book of other people's quotes that he put together in a book because he liked these quotes, and he actually inscribed it to me. And, I appreciate that. He was one of the nicest people I've ever met. And, you think that if you were a Holocaust survivor, you would be bitter, but, he is one of the nicest people you'll ever meet. He's very giving. And he took the time to put these quotes that are meaningful to him in a book, and, carries them around and gives them to people like me when he meets them. And I appreciate it. If my house was burning down, I would grab my dog and my better half, and we'd run outside. And, people think they would grab their diploma, family pictures. I would grab this because it's that meaningful to me. And also, I think another thing that's helpful to me, I don't have a shot of my desk here, but I think keeping things that are helpful to you is helpful. That sounds like a aphorism, but I have this thing that I got when I early retired, and it says, today is the first day of the rest of your life. It's a little sunflower with a little sign on it. And something I got from Valiante, I have this little post-it, and it says, deploy capital proportionate to the opportunities at the moment. And, I just sort of keep that here just to remind me what's important. And at the bottom of that all says, avoid emotional decisions to mitigate losses. And that's why I did not log in to my brokerage account yesterday when the markets are crashing, and I did not log in today because the markets are crashing. I will check at 4 p.m. when the markets are closed to see what happened. And if there's any screaming margins, maybe I will use some of that margin. But, I don't think there's anything to be gained from looking at the market when it's crashing. You can't will the market up. It's going to do what it's going to do. And if you have a process of when you're going to buy something or when you're going to sell something, you want to follow that process. You don't want to make emotional decisions and panic. So if you're going to be buying stock or selling stock or an index fund, sure, go ahead and log in and look at it. But if you're not going to be buying or selling, there's no reason to look at your account and see how much you're losing or see how much you're gaining, right? That's looking at something going up or something going down and the blinking lights is just going to make you emotional. So unless you have a reason to look, like you were logging in to buy something or you're logging in to sell something and you're doing it rationally, don't go look. So get a good night's sleep, go for a walk, and then if you wake up in the morning calm and reflected and you want to do something, go ahead, but don't do it because you're stressed out, because you're panicking, because you're having a bad day. That's not going to end well for you, right? You're not going to be able to will the market back up, so don't do that, right? I know it's stressful. Some people think watching the numbers go up or down is exciting. I don't think you need that kind of excitement in your life. If you want that kind of excitement, go watch Star Wars. If you want to relax, go for a walk, take a nap. But, that's my take on it. So anyway, like and subscribe. And, if you want to support the channel, there's a Buy Me a Coffee link. If you want to open up a trading account, there's a link to Robinhood, which I found has the lowest margin. But don't feel like you have to. And if you have any questions, put them in the comments. Good luck, everyone. Stay strong.